Good afternoon, or perhaps good morning, depending on your time zone. Welcome to this session of Integrity Data's ACA Summer Educational Series. Again, we always recognize that your time is valuable, and we want to thank you for spending some time with us this day. I'm Shelley Austin, Customer Engagement Manager at Integrity Data. Also joining me on the webinar today is Gary Schmidt, Customer Care Representative. We will be answering questions at the end of this webinar, so please feel free to submit your questions at any time throughout the session. We do have everyone on mute, but if you need any clarification, please let us know through the questions field in your GoToWebinar panel. So let's go ahead and get started. You guys already know the Affordable Care Act has proven to be a confusing piece of legislation, especially for employers, because employer responsibilities under the ACA employer mandate are often unclear. So our 5-part 201 webinar series aims to help employers understand this employer mandate and be clear on what it means for them. Our goal in the second webinar is to give you some helpful guidelines for classifying an employee as full-time. So very quickly, who is Integrity Data? Integrity Data provides solutions to improve business processes for payroll and human capital management, including simplifying Affordable Care Act tracking and reporting, enhancing Microsoft Dynamics GP payroll, and supporting employee financial wellness. Celebrating over 20 years in business and serving over 10,000 organizations, your people are always our priority. So let's dive into the full-time redefinition. So why is the full-time status important? As you guys know, an employee is eligible for health coverage when they are a full-time employee, as defined by the ACA. As most of you know, also, the ACA has redefined full-time employee by abandoning the concept of a 40-hour work week to be classified as a full-time employee and reducing that threshold to 30 hours a week, and by increasing the hours that need to be tracked when crediting employees with hours of service. Also, because reporting is done on a monthly basis, the IRS has maintained that 130 hours of service in 1 month is equivalent to averaging 30 hours per week. This webinar will give you guidelines on classifying an employee as full-time and how hours of service play into classification, while highlighting problematic examples. Note, this 30-hour threshold for full-time status is limited to the ACA only. Employers do not need to adjust other benefit programs that may have a different work week hour threshold in determining eligibility. So first, let's look at what guidelines there are to classify an employee as full-time, starting on their hire date. Employers must use a reasonable method of determining whether or not an employee starting on their hire date will work on average 30 hours per week and therefore have access to coverage immediately. There are some guidelines outlined in the final regulations when making this determination. Those guidelines look at whether the employee is replacing someone who was full-time or not, others working in the same function, and whether or not it was communicated to the applicant that a certain number of hours would be required, for instance, as defined in a contract, job description, etc. Full-time employees are not required to be tested in either an initial or standard measurement period because meeting the 30-hour threshold is assumed from the start. In any case, everyone's hours of service must be tracked on a monthly basis. It makes no difference if an employee is salaried or paid hourly. All hours of service must be tracked. For salaried workers, if you do not specifically track their hours, you can use an 8-hour day or 40-hour week rule to convert to hours of service. This slide shows you what constitutes hours of service, and there are many. And there are a lot of situations where this can get tricky. So we'll take you through a few. You'll notice that the first 3 are special unpaid absences where the employer does not have to pay the employee. So jury duty, military deployment, and FMLA absence is an example of a few. However, they must credit their hours of service. or not use the absence against them in calculating eligibility, as if they had worked. The 3 special unpaid absences were added to the ACA regulations in order to not penalize employees who were absent because of a medical reason or because they were performing civic responsibility on jury duty or military deployment. The calculation for each, not penalizing the employee or crediting them with hours as if they had worked, is the same for all 3 absences. So highlighted on this slide are 2 methods you can use to ensure that when determining eligibility, the employee is not penalized for these absences. Method 1 involves only looking at the time worked and basing the 30-hour threshold on that time. Method 2 involves crediting the employee with hours as if they had worked during this unpaid time. The important factor to note is that the results of either method will always be identical for determining the average hours per week. So let's look at an example. So on this slide, while not on unpaid leave, an employee was credited with 1,421 hours of service. They were on unpaid leave for 6 weeks. In method 1, we test them within the measurement period for only the actual time they worked, not the 6 weeks. So instead of using 52 weeks, we take 1,421 and divide that by 46 weeks to get 30.89 hours. In method 2, we do the same thing, taking the average hours per week they worked while not on unpaid leave, and then credit the unpaid leave time with those average hours. So when an employee is on call, clearly hours of service must be credited for the time they actually perform work on behalf of the company while on call. However, what about crediting hours even if there are no special circumstances requiring the employee to do any work? If being on call substantially restricts an employee's ability to use their time for their own purposes, you may have to credit them with hours of service even though they may not be called. If they have to stay on the employer's premises, clearly they are restricted and hours of service need to be credited for that time. But what if they can stay home? Here are 2 examples to illustrate how restrictions may apply in both cases an employee agrees to be on call during the weekend. So 1, let's say first the employee is a software technician who has a laptop and communication access. If called upon to perform technical support services during the off hours, the employee is required to log into the customer site and provide these services. During the weekend, they were not called. They had no restrictions on their movement or ability to use their personal time as they wanted. So in this case, no hours of service need to be credited. But let's look at a second example. The second employee is an electrician who was on call during the weekend. If needed by the production facility, a provision of their on-call pay is that they must arrive at the plant within 1 hour if a problem arises. In this case, the employee's ability to use their personal time is restricted. They cannot travel outside of a specific radius. In this scenario, the employer must use a reasonable method of compensating the employee with hours of service even though they did not actually work any hours. The guideline suggests using an 8-hour day or the average number of hours the employee is credited during normal business hours. Another interesting situation is when you don't exactly track hours of work. There are compensation programs that are not based on hours, but on output. Some of them are listed here. In these cases, you are required to use a reasonable method of crediting them with hours of service. So let's look at examples. So for commission-only salespeople, it is not a reasonable method of crediting hours if you fail to take into account travel time for a traveling salesperson compensated on a commission basis. So here's another example. For piece workers, you must develop a reasonable method of converting compensation to hours equivalents. Examples we have come across are the trucking industry specifically. So a long hauler compensated on miles traveled. The company used 50 miles to equal 1 hour of service. So a trucker who traveled 400 miles in one day would be credited with 8 hours. Speed limits and break times are factored into the calculation for 50 miles equaling 1 hour of service. Another example is the piece worker. So picking apples, a paid set amount for each bin. One bin compensated at $13 and took 1 hour. An employee compensated 107.25 in a day would be credited with 8.25 hours. So that would be $107.25 divided by 13 is how we got to that calculation. So here's another example by the catch. So fishing, a fisher. So fishing where compensation is based entirely on weight of the catch. Boats are out on average for 12 hours a day. The credit hours equal 12 hours times the number of days on a boat. Another industry would be adjunct faculty. So faculty paid by the class. One method would credit an adjunct faculty member at an institution of higher education with a 2 1/4 hours of service per week for each hour of teaching a classroom or classroom time. These hours are represented by a combination of teaching, classroom time, and time performing related tasks such as class prep and grading. And separately, an hour of service per week for each additional hour outside of the classroom that the faculty member spends performing duties he or she is required to perform. Duties such as required office hours or required attendance at faculty meetings would be an example. So the last situation we'll discuss is when an employee is shared across multiple entities within a commonly controlled or affiliated group. So the concept of commonly controlled or affiliated groups has been around for some time. It is embedded in the IRS Code 414. What has been interesting is that we found benefit and payroll managers unable to answer the question of whether or not multiple entities are commonly controlled or affiliated. If in doubt, ask your CFO or accountant, as this designation affects other areas of IRS reporting. For shared employees, eligibility determination is not based on the hours of service in each company they work for. Instead, eligibility determination is based on the total hours of service worked between all companies. So just to let you guys know, we are getting ready to transition into the Q&A part of this webinar. If you have any questions about the topics that we just discussed as far as classifying an employee as full-time, you can start to enter those now. And I just want to mention a few other things about the educational material that we have out there. This is just one of many webinars that cover the Affordable Care Act. We want you to have access to all of our other educational resources, which are all available at www.acafluent.com. We have 101 educational videos that cover whether you have to comply, how to comply, and penalty details. We do have the videos from our 201 educational series, which are available for on-demand viewing. We also have, you can download our ebook, Employer Essentials for IRS Reporting, and our printable infographic, ACA Checklist for 2018 Reporting. We also have some quick links to IRS resources from our site if you want to hear it straight from the source. And lastly, you can access our blog feed as it continually updates with new hot topics. Here are the upcoming webinar topics and dates. So don't forget to register at integrity-data.com/ACA-201. And also be sure to visit the page after each session for the previous recordings and slide decks. And of course, one last thing, for more information about any of our other solution offerings, you can visit integrity-data.com/ACA. Okay, so now we are going to address questions. If you have a question again, please enter it in the side panel. Gary, do we have any questions yet?
Yes, we do have one.
Okay.
So far. Are we required to include paid sick leave under time to include? What do you think, Shelley?
Yes. And
Hmm.
if you want to elaborate, Gary, you can.
Okay. Yes. It's just part of the FMLA. Even if it's paid, you still have to track the time. Now, if your payroll system has a pay code that tracks hours for that paid sick leave, then you wouldn't have to add up additional because your pay codes on the uploads would bring in that sick time, and then we'd have the hours in the system. But if you don't have a pay code that tracks the hours that they're out on PTO, on a sick time, then you'll need to either use our FMLA unpaid leave method on the configuration, or upload hours through the Excel spreadsheet. Does that make sense? I would I would like to say for all of you that we have a lot of KBs under that's knowledge based articles that you can reach easily once you get on the cloud website by hitting the question mark at the upper right that's in a blue circle. Takes you right to all the KB articles. One of our classifications categories is called employee classification. And in that, it talks a lot about what this webinar is like that we did today. For example, 13050 is reclassifying options for a newly hired but misclassified employee. So can I take him back to part-time type of situations? So I would strongly recommend you read some of those articles if you have any questions about these topics here. And if you have any others, questions specific, you don't want to ask a question, then you can send it through support tickets and we'll answer them for you. All right, we do have a second one that came in, Shelley.
Okay.
Regarding employers with union and non-union employees, I am having a hard time explaining to a client why both groups must be added when it comes to reporting. Do you have any advice on how to explain the need to add all employees for ACA compliance, even if the union employees do not get insurance from the client, but from their union?
Yes. So the best way to explain it is, so it sounds like there's a union sponsored plan. So the company probably may not even know anything about the plan. That's totally ran by the union. But the employee is an employee of the company. So the employee has to receive a 1095 form from the company. Even though it may not include any of the plan information, it will include coding that indicates that they are part of a multi-employer plan. They will also get an additional 1095 form from the union, which will have plan-specific information. But in order to be in compliance, that company is the responsible employer of that employee, and because of that, they need to issue a form from them, and in addition, the employee will get a separate document with the official plan information from the union. Did you have anything to maybe add to that, Gary? But I think if you explain it that way, that they are responsible for that employee because they are the official employer.
Yeah,
Um,
yeah, that's good. And what happens then on your 1095s, you'll get a 2E down on for the union employees, you'll get a 2E on line 16, which is a multi-employer relief. And that tells the government they're part of a union plan. Now, if you're self-insured, then you will see on part three how they took the insurance if they took it.
Yeah, so you could almost try to explain it as it doesn't really matter whether they're sponsoring the plan or not. The ACA is an employer mandate, and because that union, whether they're union or non-union, the employer is the employer, and they are responsible for issuing a form in order to be in compliance. So let us know. Hopefully that helps. bring
She
some
says,
clarification.
thank you. I think that helps.
Does okay. If you have a more specific question or if you want to get more detail, send something in.
Yep. And we do have some KBs about union and non-union, so you might want to read those as well. Um, okay, so how do you get to the knowledge base? There are two ways. If you open up the cloud, the ACA compliance solution, and you log into it, on the top of the page, on top right of the page, next to your name, there is a blue circle with a question mark. If you click on that, one of the drop down places in there is knowledge base. And so you can click on that and it'll take you right there. Otherwise, if you go to integritydata.com and website, go to their website, then you can, under the I think it's support maybe uh,
Hmm.
heading, there's a drop down that says knowledge base, and then you can click on that. And somebody wants to know, can we get a copy of today's slides? I think that's an automatic, right?
Yes, absolutely. So the video of this webinar will be available on the Integrity Data website within 24 hours. So it should be up first thing tomorrow morning. And the slide deck and video, both will be available.
Okay, she said thanks.
No problem.
At
Do we have any other
this,
questions?
this looks like all of them. Let me slide up, make sure we got them all. Yep. Yes, that's it at this point.
Okay, well, we want to thank everyone for joining us today. If you don't have any questions right now, but let's say something comes up after you leave this webinar, please feel free to email us through the support email, and we can always address questions that way. In the meantime, we hope to see you again at the next educational series and look forward to speaking with you next time. Have a great rest of your day. Thank you.
Bye.
Bye.